find ourselves in difficult times where we are having to navigate extremely differently, and the expertise that we've got online today, I hope you'll agree, will be able to provide some support, particularly in the following areas that you can see on the agenda there. Before we get into those sections, just a little bit about who we are. High Wycombe Bidco is a business improvement district based in High Wycombe Town Centre. So we are a private independent company run by businesses for businesses. We represent about 675 businesses in the town centre. So you are most welcome if you're joining us from out of town, but we do primarily serve the businesses in our specific area. So if you are from out of town, thank you for joining us. Please don't go away. We're delighted to have you. Just please bear in mind there might be some regional differences in terms of the expertise offered, particularly around grants. We're not going to be able to cover everything, as you can imagine. These are unprecedented times and there are so many questions. We're going to have about 10 minutes per each speaker, and there will be plenty of time. Please do use the chat and Q&A functions throughout so we can try and answer all your questions, but we will have about 10 to 15 minutes at the end that we hope for questions as well. It might be relevant for me to unmute some of you who are attending. If you want to ask your question in person, you can, or as I said before, you can just direct your questions to the panelists alone if you would prefer. Any questions that we can't answer today, please do get in touch with us. Please do have a look at the Buckinghamshire Business First website as well, because they are collating all the data of all the webinars that are available, particularly obviously in Buckinghamshire, and I have a huge amount of specific information on the grants available to businesses. We also have a fact sheet that's quite useful if you want to identify any loans or grants that you haven't been able to already access support. And of course, we want to hear how you're doing, so please do keep in touch and let us know. So without further ado, I'm going to hand over to Charlotte, who's going to talk to us about the HR aspects and responses for us. Charlotte, over to you.
Thanks, Melanie. Right, so HR, big thing at the minute, to be honest, and starting with furloughing. So what is furloughing? It doesn't actually have any legal definitions. When we're talking about furloughing your staff, it is a particular leave of absence only under the coronavirus job retention scheme. So that is a scheme that allows you to put employees on a leave of absence for a period of at least 3 weeks. The scheme is currently open until 31st of March. And during that time, you can reclaim 80% of their costs up to a cap from the government. And I won't go too much into that because I think Cheryl is going to cover that in her section. But there are some things to unpick there. First of all, it's a scheme only open to employees, but employees can include, for example, directors who are employed, salaried partners who are employed, agency workers, as well as your sort of regular bog standard employees. They have to be on a leave of absence. Your staff cannot still be working. There is a couple of loopholes there. The first is that directors can undertake statutory duties. The government have clarified very unhelpfully that is more than simply filing documents at Companies House, but they don't say what else that could possibly be. So we're not totally clear on how far a director's statutory duties go versus what is them doing their job as an employee, but that is an exception. And employees can undertake voluntary work. What is voluntary work is very unclear. I personally think that is more intended for your employees to be able to undertake charity work whilst furloughed. So they will be working, but possibly not for you. There might be an exception if you are a charity and it doesn't bring you any revenue. But as a general rule, I would say someone doing something that is part of their normal job is going to be furloughing. It's not going to be furloughed because they're going to be working. So those are sort of the main points. If you have employees who are not, or workers that are not employees, there are other schemes open for them, but the coronavirus job retention scheme is just for employees. In terms of how you furlough employees, that is dependent on what's in their contract. So some contracts have in them a right of layoff. And layoff is a sort of temporary redundancy where you can say to your staff, I'm sorry, I don't have any work for you to do at the minute, and I'd like you to go home. You remain an employee, but I'm not going to pay you, subject to a statutory layoff payment. And I'll let you know when there's work to do. Most contracts don't have that, and therefore you'll be looking at preserving your employees' rights. Your employees have a right to work and a right to be paid their full pay under their contract. So you would have to be looking at agreeing with them that they're going to be furloughed. In my experience, that is going very smoothly for most employees. You just say to them, okay, we can't run the business, or we don't have any work for you to do, and therefore we'd like you to take a leave of absence. Whether you're going to pay them the 80% or pay them in full and top up their pay, that's, again, to be negotiated. In theory, your employees have a right to receive their full pay, and therefore if you're not in a position to top up, that's something that needs to be separately agreed with them. My big advice with all of this is to get it in writing. The government have already said they're going to be auditing claims after. They've also already said that this scheme is costing them twice as much as they thought it was going to. And so my view is that they're going to be quite strict on those audits. So keep your records really tight, really focus, keep dates, get employees' agreements with signatures, and make sure you've got those records in place. So in terms of whether there's work to do while your employee is furloughed or while you are on furlough, I think I've probably already covered that. It is a leave of absence. You cannot be doing any work. And therefore, for most companies, it probably isn't appropriate to furlough every single member of your staff unless you are closing the business as a whole. So it's something to think about quite carefully. Who do you furlough? What work still needs to be done? You will probably have to have an accounts function to make basic payments. But that is something to think about, and do bear in mind as well that the normal rules of discrimination do apply when you are doing things like selecting your staff for furlough leave, particularly if the staff being furloughed are not being paid in full and the staff that are working are being paid in full, because you've got that potential detriment there. So that's always something to bear in mind. So once your staff have been furloughed, and they've been furloughed for a minimum period of 3 weeks, or as long up to when the scheme closes, currently on the 31st of May, although there is scope within the guidance to change that, then they are going to be returning to work. There is no scheme in place, there's no statutory scheme, there are no rules about how you do that, but again, I would say keep your records really tight, write to your staff and say, okay, well, you've been on furlough since this date, and the work is now picked up, and therefore we want you to return on this date. You might want to address health and safety concerns in that letter. You know, how are you going to continue to comply with restrictions, with social distancing? How are you going to protect your staff in the workplace? I think there is going to be quite a lot of concern about returning to work and being back in that crowded public space. So those are all things to consider, and get your staff to confirm in writing that they agree and that they're happy, and what the terms they are going to be returning on will be. So are they returning under their normal hours, at their normal pay, or are you easing back in? Are you, I know a lot of staff, a lot of companies, particularly in sort of warehouse environments, are letting half their staff back in, or doing day on, day off to maintain social distancing, keep fewer people in the workplace. But you need to make those arrangements really clear and agree them with your staff. And then finally, if you haven't got enough work, when you're looking at returning and you need to make redundancies, the procedure is more or less the same. So you need to identify where the prospective redundancies are and the reason. You need to consult with your staff and try and identify alternatives before confirming with them that their job has been selected for redundancy and giving them the appropriate payments. The only difference I would say at this stage is that there is a new alternative of continuing furlough while that scheme is open. So I'd say the whole point of the job retention scheme is to avoid redundancies. It is why a back date was allowed on the payments. So it didn't come in until mid-March, but you can actually backdate to 28th of February. And that was for any staff that had already been made redundant. You can rehire them and put them on furlough. So I think there is going to be this expectation that you do consider furlough as an alternative while it is still available. Difficult to say at this stage, and obviously it would have to go all the way through to an employment tribunal for a judge to say whether that is a legal requirement or just a recommendation as to best practice. We probably won't get that far because it takes too long to go through the employment tribunal process. It's currently taking at least a year. So we might never get that ruling, but I would say certainly don't leave yourself open to prospective claims, because even if they never get to the end stage of the employment tribunal, it's a lot of work that you probably don't want to deal with right now. It's a lot of time, it's a lot of cost. So certainly make clear if you've considered that and the fact that you have considered it and why it doesn't work. Okay, and I think I've probably covered everything there, but if there are any questions, please do let me know. I'm going to hand back over to Melanie.
Thank you, Charlotte. That's really helpful. And I think it's probably worth reiterating, because we have had some pre-submitted questions on it, that if staff are furloughed, they cannot do anything for the company. So they can't just pop in to meet insurance requirements, to check the office once a week, or they can't pick up paperwork and so forth. Is that correct?
That is correct. As far as I'm aware, it's so difficult. So obviously there will be these tasks, and I think there may be an argument to suggest, well, that doesn't make us any money, and therefore it's voluntary work. But I think if that's part of your employee's normal job, so if you have an office manager and part of their job is to lock up and maintain the buildings and things like that, that has a value to your business, and therefore I think the government's going to be quite hot on that. So just my personal view is don't take any risks with it. I think they will be auditing quite carefully, but it is a leave of absence.
Okay, thank you so much, Charlotte. That's really, really helpful. Please do post your questions if you've got questions for Charlotte, and we will pick up on them in a short while. Next, I'm going to hand over to Cheryl, who is going to follow on that theme. So over to you, Cheryl. Thank you.
Hey. Thank you. Yes, I'm going to pick up a bit more on the financial aspects of the furloughing and how you can claim. And we have been now told that the portal should be available from the 20th of April. So hopefully these claims will be submitted quite soon. To go through the financial aspects first, the claim should be 80% of your employee's regular salary. So that is quite straightforward, where you have employees that are on a fixed annual salary. But where you have employees who are paid on an hourly basis, obviously the calculation becomes a bit more complicated. The guidance says that you have to claim for them the same amount that they were paid this time last year, or the average of the last 12 months wage, whichever of those two is highest. So that's how you work out the 80%. On top of that, the employer will also be reimbursed for the employer's NI on that 80%, the national insurance, and they will also be reimbursed for the employer's pension contribution on that wage, but only up to a maximum of 3%, which is the minimum that should be paid under the workplace pension. So that's how you calculate how much should be paid. Other things that need to be included or don't get included, the guidance is quite clear that non-monetary benefits such as an actual company car should not be included. There is some doubt at the moment as to whether car allowances should be included, and I had a discussion with Charlotte just before we started this, and we are both seeing contradictory advice. Some people are saying don't include it, and when the guidance is clearer, update your claim to include car allowances if that's what the government decides. Other people are saying that a car allowance is a fixed part of the fixed monthly salary and therefore should be paid. Unfortunately, I don't have a clear answer on that at the moment. We are hoping that the government will clarify that very shortly. They have been updating their guidance every few days, but that's not a point that they've covered at the moment. As I said, the portal should be available from the 20th of April. That's what we've been told. And you will be submitting your claim on using this portal as part of your payroll process. What will happen then is the revenue will take, they're saying 5 to 6 days to check the claim. That check will be quite a superficial check at this stage, just checking that you're a registered employer and that your employees were on your payroll from February. They have said that they reserve the right to do full audits, which we do expect them to be doing, but these will be done retrospectively. So unfortunately, if you've made an error in your claim, it may well be some time before you find out. So do take advice from a payroll bureau or a professional if you need help making that calculation, because they have also said it will be up to the employer to make the calculation and to make the claim. The portal won't be doing that calculation for you. And then the good news is that hopefully they will be checking the claims within 5 to 6 days. They said they stress test the portal. It will work for the number of people. a number of claims they're expecting, and then they will be making the payment direct into the employer's bank account within 5 to 6 days of the claim. Let's hope that is the case. One of the pre-submitted questions was, will the scheme be extended? As Charlotte has already stated, this scheme has cost the government significantly more than they were expecting. Their original advice was that just 10% of employees would be furloughed, and obviously the actual number has been significantly higher. So there is an argument that they may not be able to afford to extend it. However, the contrary argument is if they don't extend it, people will either go back to work far too early, employees will be made redundant, which is exactly what the government is trying to avoid. So it really is a watch this space at the moment. They may announce a bit more when they issue their new guidance on lockdown tomorrow, but I expect it'll be nearer mid-May before they tell us whether they will extend or not, when they've worked out what the financial costs will be. Okay, the other big area of help that we've had from the government has been deferring various tax payments, and I'll split those down into the various types of taxes. Firstly, VAT. Hopefully most people are aware that the VAT that is due for the current quarter, so that's any payments that are due to be made between now and the end of June, are automatically deferred. You don't have to apply. The deferral of the payment will be automatic. However, two important things to note there is you do still need to submit your VAT return. And if you are paying by direct debit or standing order, you do need to cancel that direct debit, because the Inland Revenue are not going to cancel it. So although you don't have to pay them, they will still collect the money if you don't cancel your direct debit. So that automatic deferral will apply to March quarter ends, which are due at the end of April, beginning of May, and also the June quarter end, the April quarter end, which will be due beginning of June. As of now, we do expect that the May quarter end VAT will be due on the normal date. We haven't had any further announcement that they're extending this scheme. The one thing that they did announce linked to VAT this week was that import duties can be deferred. Probably a bit late to be telling you this, as the payment was due to be made today, the 15th of April. But if you were due to make import duties payments today, it is possible to defer it, but only if you apply to defer it and you can prove that you are suffering severe financial difficulties. It's not an automatic deferral. I won't say much more about that, because really I think the time for it is gone, and looking at the participants, I don't think there's anyone that it will necessarily be applicable to. So I'll move on to income tax. The payment of the July payments on account for all taxpayers has also been automatically deferred. Initially, this assistance was only for people termed as self-employed, but it has now been extended to all taxpayers. So it will also cover your owner-managed business, or your business owner who takes most of his remuneration by way of dividends. The July payment on account will not be due now until the 31st of January 2021. So the same as with the VAT, this is a deferral. The liability will be due, but hopefully it will help with cash flow. Again, this deferral is automatic. You don't need to apply for it. But if you do want to make the payment earlier, you can do. However, as long as the payment is made by the end of January, there will be no interest accruing on payments on account. Other taxes such as PAYE, national insurance, corporation tax, they are all still due on their normal date. However, experience is showing that the HMRC are being very, very lenient on this, and they are supporting businesses, which is what they've been told to do. So it is possible, if you can't pay one of these taxes, to phone up the Inland Revenue and agree time to pay. From personal experience, I've had several clients that have phoned up and very easily managed to defer their PAYE and national insurance payments. At the moment, it seems that the revenue are deferring these through to July, but saying if you need to extend that deferral or enter into a payment plan when we get to July, just contact us. They're not asking for any evidence to support the deferral PAYE. They're just simply saying, why can't you pay? The answer being coronavirus. Okay, we'll defer. So please do get in touch with the revenue and help ease your cash flow by deferring whatever taxes you can do there. Next point is the self-employed income support scheme, which came in quite a bit later than the furlough. This one is different in so much as it's not a loan, it is actually a grant. And the grant is going to be based on 80% of your taxable income, based on an average of the last 3 years.
Sorry, Cheryl, bear with me. I think I've just done something funny with the screen. Apologies. Can you still see the presentation?
I can.
Okay, thank you. Sorry.
I continue.
Yeah, thank you.
So yes, self-employed will be able to claim 80% of their average last 3 years taxable income, again capped at £2.5 grand per month, £2,500 per month, the same as the furlough scheme. In order to be eligible, you need to have taxable income of less than 50,000. So the self-employed that earn less than 50,000 will not be able to claim under this scheme, and currently do not have any kind of grants or additional support available to them. You need to have been self-employed in the tax year 18-19 and have submitted a tax return for that year. The revenue has said that the way they'll run this scheme is that they will contact the eligible taxpayers and invite them to fill out a form applying for this grant. To date, I haven't heard of anyone that has received the application form, but it should be coming electronically to eligible taxpayers. No firm date for when the cash will be available for these grants, but it's expected to be early June. One word of warning that the revenue said when they announced this additional help is they did say that as the self-employed want to be helped out in these difficult times on the same basis as the employed, they will expect the self-employed to pay tax on the same basis as the employed going forward. So I think that's quite a clear hint that once we get through this, there will be changes to the self-employed tax system. Final point I wanted to cover was on cash flow forecasting. Obviously, cash is key, absolutely critical to getting you through this, and cash flow forecasting is something that any good business should be doing anyway, but it's very, very important at the moment. We would recommend that you do forecasts that are rolling for at least 3 months. So as you complete 1 week, add another week onto the end of it. And the other thing you should look to do with your forecast is be able to flex them, so that you can start off by saying, okay, at the moment we have seen our turnover fall by 50%. What happens if that drops down to, if we lose an extra 25%? What impact does that have on our cash flow? Are we still going to be able to get through this, or do we need to apply for additional support? Most accountancy software have various cash flow applications, apps that you can use that work with your accounting software. A good one that's available at the moment, if you don't have anything, is Xero, that uses a product called Fluidity, which is very easy to use, very user-friendly. It allows you to flex and add different pieces of information in and sort of save various versions of the cash flow forecast. So absolutely vital that you look at your cash flow forecasting. On top of that, do everything you can to maximise your cash flow at the moment. Obviously, collecting money from your debtors, your customers, is very difficult at the moment, but absolutely key. Keep talking to all your customers, understand when they can pay you. If necessary, come to an agreement for sort of partial payments, but then give them a call the day before the first payment's due. Just check that they are going to keep up that payment. Don't allow anyone to have the excuse that they forgot or that it just didn't get processed on time. You need the money as well as they do, so collect your debts. Start invoicing more regularly. So if you normally invoice your customers once a month, bring that down to weekly. Just try collecting the money that you can there. Obviously, you need to look at most of your costs and see where savings can come there. We've already talked about the savings you can make on your employees. But look at other overheads. Talk to your landlord. Can you agree a deferral of your rent? Look at all your discretionary spending. See what you can cut there. Bearing in mind that some of that discretionary spending may help you maximise sales and help you come out of this. But make sure you've reviewed everything. And as I said, do make full use of all government support that there is there. The whole purpose of it is to get businesses through this, to minimise the effect on the economy going forward. So do sort of defer any taxes that you can and get all the help that you can through this. And the final point on that is just remember that there is a time lag between your business improving and the cash coming in again. So you need to forecast sufficiently far in advance. And even though business, when your business starts improving, that's often a time when a lot of businesses find cash flow, they struggle with cash flow. Because as business picks up, they need to pay their suppliers, they need to get the employees back on board, but it's sometime before they complete the project, invoice and collect the cash from the customers. So cash flow forecasting as you're coming out of a recession, as you're coming out of this crisis, will be doubly important. Okay. So if there are any questions, I'm happy to take those now. Otherwise...
yeah, there are a couple, Cheryl. Thank you so much for that. That's really helpful. If you could stay off mute so we can direct these at you, and it might be, Charlotte, you might need to come in on some of these. So the first one is a company who've had people start on the 24th of February. They were all put on furlough as the work they were brought in for was delayed, and they were not included until the March payroll run on the 30th of March. With the new guidance stating that they had to be on a PAYE RTI submission on 19th of March, where do they stand?
My understanding was they had to be on the payroll at the end of February. I'm happy to look into that further, but I don't think they will, or I don't think the company will be able to claim if it furloughs its staff.
Yeah, so there has been an update. Actually, while we've been talking, I've received it. So 19th of March is the revised date, which was brought in to catch a load of people that had started new jobs between the 28th of March and when the furlough scheme was announced. So I think 19th of March is the current date, and I think I'm going to agree with Cheryl here and say, I think if you've missed that date, then unfortunately there is this group of people that are being missed.
Okay.
We should do these more often because the government seems to issue advice every time we go on air.
Yeah, yes, I got the email as we were talking, actually, just finished. But yeah, it is now employees that were on the payroll on or before the 19th of March.
That's great. Thank you so much. Just on that, what do people do? You mentioned this, Cheryl, as well, that there's contradictory advice out there. I mean, do you have advice for people that are hearing the contradictions? What should they do? Should they approach their own accountants with their unique setup and information and get specific advice in writing, or what would you recommend?
They should do, because their advisor should look at their individual circumstances. They'd look at the contract of employment and give specific advice there. However, where the advice is contradictory, such as the car allowance, their advisors will only be able to give them their opinion, and they will caveat that at the moment. Until the government makes their advice clear, it's still open to interpretation. But regardless of that, any queries that you've got, please do see your advisor, or feel free to email ourselves. But we would need the full details of what is specifically written in that employee's contract and sort of some of the background to it.
Brilliant, thank you, because it is confusing times out there, isn't it? So another question I've got here is around national insurance, employer national insurance. So can you still claim that if you've not paid any in those months due to employer's allowance of £3,000?
Yes, you can. You can claim the employer's and national insurance that is due on the 80% salary.
Brilliant. Thank you very much. Appreciate that. So I've got one question here that might be, Charlotte, it might be for you, and it might just be a personal view rather than the professional one. I'm not sure on this, but what is the view around staff holidays? So if a member of staff has booked a week off whilst on furlough and they then understandably want to cancel it, what do they do? And then in addition to that, the second part of that question is if we're on furlough for several months, accrued holiday will obviously add pressure if it has to be taken in the remainder of the year. Does it accrue, and are employees obliged to honour this? So, can you...
Yeah, so holidays become the big thing as part of this furlough scheme. It could possibly be a webinar in and of itself. There's a lot of things to unpack there. First of all, holiday in the UK we've got different things and we have to deal with them differently. So the first 4 weeks of leave, so 20 days for full-time employees, is from the EU regulations. There is a new law that says that holiday, statutory holiday, can be carried over for the next 2 years where employees are prevented from taking it by coronavirus. Then we have 1.6 weeks, so 8 days, which are the bank holidays for those who don't work the bank holidays, or alternative days for those that have to work them. And that is from UK law. Those are dealt with differently. And anything over 20 days plus the 8 bank holidays is company holiday, and that's dealt with under a contract. So if you have concerns about holiday, you as the employer can tell your employees when to take their holiday by serving requisite notice. You are entitled to refuse cancellation at this time of holiday requests that are pre-booked. Just make sure to communicate that as a policy. So you can say, really sorry, I know you're not going to be able to actually go on your holiday, but we would like you to take the annual leave. We've only received clarification this week that employees on furlough can take annual leave whilst on furlough, because there was a confusion about whether that would break the continuity of the 3-week period of unpaid leave. I don't know, and it might be a question for Cheryl about whether you can actually claim back under the furlough scheme the days where your employees are designated as being on annual leave. The one thing we do know is that they have to be paid 100% for those days. So it's all a question of thinking what is more important to you, your immediate cash flow, the furlough scheme, or productivity when you get back. When you get back to work, you can either restrict holiday, you can cancel company holiday, and you can very carefully manage the statutory holiday. Do be aware that if you prevent your staff from taking their statutory holiday, it will carry over for up to 2 years. Or you might take the view of take it now whilst we're very quiet and put in place either notices, statutory notices that you serve on your employees to say, we want you to take this holiday, or you can just encourage them to take it and say that we do want you to take all your holiday this year, and if you don't take it, it isn't going to carry over, because if you give that opportunity, then it won't. So it depends on what the particular issue is. If your issue is you want staff to take annual leave whilst they're on furlough, you can require them to do that.
Thank you, Charlotte. That's really helpful. It's quite difficult, isn't it, to know what the right thing is to do ethically, and then to have to navigate all the legal aspects is really, really important. So thank you for that. That's really, really helpful. So those are the main questions that have been coming up. Another question I had is there a risk to payment, the retention of the job retention payment if staff are then made redundant? So, i.e., can you still claim for the furlough payment even if staff are made redundant, or will there be question marks over that payment?
You will still be able to claim for the furlough for the period that they were furloughed up until them being made redundant. So as long as you follow a proper redundancy process, there's no reason why you can't start a redundancy process on someone that is currently on furlough, and you will be able to claim the 80% reimbursement for the period of the furlough.
Brilliant, thank you, Cheryl. So lots of questions around HR and furloughing, and I know we're going to have to move on because of time, but that's really helpful. So just to reiterate a couple of things that came up from last week as well, was that make your submit your VAT returns. It's the payment that's deferred, not the VAT return itself. You still have to do that within the normal time frame, so that was important and worth reiterating, as we had some questions on that. So if I can then hand over to Andy.
Sure. Thanks, Mel. Hello, everyone. I hope that everyone's doing well, happy, healthy, and keeping your spirits up at the minute. So just wanted to go over an update with regards to the coronavirus CBILS loan scheme. It was launched last week with some understandably some controversy around with regards to PGs and things like that the banks were asking, as well as the bureaucracy. It looks like the government has tried to clear some of that up with the banks. No guarantees are being asked for loans up to 250K, and what I'm going to do is focus on that segment of eligibility because I presume that's who we are speaking to. They have raised the limits in terms of who is eligible for taking on a coronavirus business interruption loan. They've doubled the amount that they can pay out up to 50 million. And yeah, so really it's about, what I want to talk about is eligibility. Now, having spoken to some of the banks with regards to eligibility, I think a lot of the confusion out there with smaller businesses was that this is basically free money that the banks are going to give away. That is not the case. You do have to pay it back. Although you're not signing a guarantee, you are still liable to pay the funds back. The government is covering the first 12 months of interest on your behalf, as well as any setup fees. I don't believe that includes the arrangement fee, which is technically different than the document fee, which is a fee to set up the security, such as a debenture and things like that. But from my understanding, the interest will be covered for the first year, as well as the document setup fee. Whether that includes the arrangement fee, I'm not too sure. In terms of facts and figures, from about today, only about 1.4% of applications have been accepted currently, and that equates to about 4,200 businesses actually receiving a coronavirus business interruption loan. That's out of about 300,000 applications, and so really the success of this loan scheme is yet to be determined. I would say that if you are interested in receiving a loan or getting a loan, you'll have to speak to your bank first. Most banks will only look at their current customer base first before looking at any outside customers. You will have to have been eligible for a loan prior to the coronavirus interruption. So that meaning your business would have had to have been profitable, sustainable, and have good credit score prior to the coronavirus interrupting things. You will have to have proved that that the coronavirus has had a detrimental effect on your business and on your cash flow to be eligible for the loan. So the bank has every right to decline any customer based on their criteria and their vetting process, essentially. So what does that mean? Effectively, you're going to need to have a business plan in place. That's definitely going to be a must, and that's going to have to include, a 12-month cash flow forecast, as well as a robust sort of plan about how you're going to get through this. You're going to have to demonstrate that personally, financially, that you are sound and you have a decent credit score and you're not too highly geared. And you'll need to show profitability and affordability. So that being said, what the banks are going to want to look for is they're going to annualize any proposed loan payment. So what that means, we'll take a 12-month view over all of your loan payments and weigh it up against your profits, your adjusted EBITDA minus your dividends. So they're going to want to see that you can afford your own lifestyle as well as the business being able to sustain itself. And the banks, unfortunately, it is bureaucratic in itself, and you're going to have to make sure that you have all of your paperwork on order. So as I said, business plan, cash flow forecast, your tax returns, personal bank statements, just to name a few. An alternative to the CBILS is obviously invoice finance or hiring a professional credit controller. So as Cheryl mentioned before, in terms of negotiating with your debtors, if you're giving 30-day terms to your debtors and you're struggling to get funds in the door, you can finance those invoices, or you can hire a professional credit controller to help chase those debts on your behalf. I've been speaking to several businesses who do use professional credit controllers, and they do work. They can add much needed cash back into your business. But as I say, I'm finding that there are people who are still interested in CBILS loans, but just keep in mind that it's not free money. You do have to pay it back, and you do have to have a robust business plan around your proposal for getting one. So I know a lot of companies at the minute are sort of apprehensive about taking on more debt, but if we're desperate, if a business is desperate enough, the banks are providing these loans without a personal guarantee. So that being said, I'd like to extend an offer to any businesses out there who want to chat through a business plan or cash flow forecast, just to give you sort of, from the bank's point of view, what that looks like, and help offer, any guidance I can, so that your application is successful. So that being said, as I said, there's lots online. Feel free to have a look on the internet, and I'm sure you all have been, to keep up with the most recent news and changes. It is changing sort of very quick and fast, and I think the government is doing everything it can with the banks to help sort of speed these things along. But it's not a quick fix, and there are certain hurdles in the way. But as I said, I can certainly help. No obligation. If you wanted to have a chat about your business plan, about your bank application, to give you my best advice. So good luck out there, and stay safe.
Thank you, Andy. That's really helpful. And there's some, I can hear that, there's serious reservations around the success of the business interruption loan. I can't believe 1.4% have been successful. It's very, very low, isn't it? So thank you so much for that. I really, really appreciate it. Ewan, because of time, I think if we hand straight over to you.
Okay, thank you. Thank you, Emily. So I'm going to talk very quickly about a couple of issues, and the first of which is lockdown and contracts. What happens if you can't comply with the contract anymore because of the coronavirus regulations, or perhaps you have an issue, you just don't have enough staff, they're ill, or etc. So there are three things that may help you here. In the absence of these things, then theoretically you're in breach of contract. So it would be good if you could pin your coach on one of these three issues. One is if you've got a contract or terms and conditions which are reasonably well drafted, you should have in there something called a force majeure clause. Now, a force majeure is usually a long list of things which will excuse the parties, either party, from performing under the contract. These are a list of things such as strikes. If it's well drafted, hopefully we'll mention epidemics or pandemics. But if they don't worry, because usually at the end there's often a clause saying any other matter or issue which renders performance of the contract impossible for either party. If you've got a force majeure clause, then in order to be able to take the benefit of it, usually there are some steps to be taken. So it will usually set out that you need to notify the other party within a set period that you are going to invoke the force majeure clause. So if you've got one in your contract and you need to rely on it, then do just check whether there are steps you need to take before you can actually avail yourself of it. If you don't have a force majeure clause, then the other option is if you want the contract to terminate, if you don't want to be obliged to perform, then you can claim that the contract's being frustrated. Frustration is quite an old doctrine which sets out that where performance of the contract is impossible without either party being at fault, then the contract terminates. most of the case law on this is not down to legislation. This is case law set out in the courts. Dates back to World War II, where it became an offence to trade with an enemy nation. So there were various contracts which were frustrated because at the date the contracts were entered into, Britain and these countries were at war, but then as war progressed, they became impossible to perform. So, as I said, the effect of the contract terminates immediately, and there's usually very limited recourse. So, if you have a contract, say, for putting on a concert, and that's impossible because of the coronavirus regulations, then there's no way that a court is going to award damages for somebody refusing to comply with a contract, which would otherwise be illegal. And then the third thing you can do, which is probably the obvious thing, which you should perhaps do in the first place, is negotiate. So you can always agree to vary or terminate the contract. So the second thing I want to talk about is directors' duties. Now, normally directors of a company don't incur liability for the debts of the company, but they can do in certain limited circumstances. So one is all directors have a duty to act in the best interest of the company, of its shareholders and creditors. But when you're in an insolvency situation or at risk of insolvency, then the director's duty shifts. So the directors then primarily, the primary concern should be the creditors, not the shareholders, the creditors. And if the directors don't have concern for the creditors, then they may potentially be liable to the company for breach of duty. The second area where they may incur liability is under the Insolvency Act. Now, the Insolvency Act sets out something called wrongful trading. Now, wrongful trading is where directors of a company knew that the company was likely to go into insolvent liquidation, insolvent administration, and they carried on trading regardless, and the effect of that continuation of trading has meant that the company's losses have been increased. Now, in those circumstances, those directors may become personally liable for those additional losses. So, a defence to a charge of wrongful trading is where a director took all possible and reasonable steps to minimise losses to the creditors. So what should you do if you think there's a risk that your company may become insolvent? And that's something that we all may have a look at in the coming days. What you need to do is, if you think your liability will exceed your assets at any point, you need to watch your cash flow very carefully, as Cheryl touched on earlier. You need to consult your accountant or possibly an insolvency practitioner at an early stage if you think you're in trouble and you can't see a way out. And you also need to keep records of what you've done. So you need to prepare your defence effectively. You need to demonstrate that you've taken all reasonable steps to look after creditors, make a note of those, make a memorandum of any conversations you have with fellow directors, keep board minutes, etc. And then the third thing I want to talk about is changes to the insolvency regime. Now, in particular, in relation to wrongful trading, the government made an announcement at the end of March that they intended to suspend the wrongful trading regime. And they intend to do that retrospectively for 3 months from the 1st of March. And what they also intend to produce is a new insolvency protection, something similar to Chapter 11 regime in the USA. Now, Chapter 11 gives companies a moratorium or breathing space from their creditors. So they get protection from their creditors whilst they're working out a restructuring plan. Now, it's worth pointing out that all the government announced they intend to change the law. That will require legislation. That will require Parliament to pass that legislation. Parliament is due to sit again next week and virtually. But so far, the law hasn't actually changed. The government have made a lot of promises about various things they do in relation to the coronavirus crisis, and they haven't always delivered. So it would be unsafe for you to rely on this announcement of a potential change in the law now, because the law hasn't actually changed. That said, it would seem a fairly simple thing to do to produce legislation to get rid of the wrongful trading regime. The other insolvency protections will take a lot longer, some complicated drafting, which will need to go to consultation. So I wouldn't hold your breath on those, but certainly the wrongful trading regime may be suspended shortly. So those are really the issues that I just wanted to touch on briefly, and happy now to hand back to Mel in case there are any questions.
Thank you, and that's really, really helpful. It's sort of a mixed blessing, because we hope we won't need the insolvency, but obviously we want to know, direct people where to go for help at this stage. But really appreciate that. Thank you so much. A couple of the pre-submitted questions that we had were around actually local government support and some questions. Now, obviously, we can't speak for the local authority, but just in the interest of time, because we've only got a few minutes left, I will just address one, which was when's the money coming in, and this was more directed at Buckinghamshire County Council. So there was a communication that I received that is on Tuesday, which said that £36 million worth of grants have already been given. They say it can take banks a couple of days to process the money, so those payments and grants will be going to about 2,700 businesses and businesses in the retail and hospitality and leisure sectors in the next few days. So there's hope there in terms of the funding and the finance that is coming through. So that's really good news. All that remains then to be said is thank you so much to our panelists for joining us and sharing your expertise. Your contact details are available on each of the slides, and we will be sharing these slides out. And to those of you that are attending, thank you so much for joining us. We really appreciate it. Don't sit on any questions. There's still a minute if you want to get a question out there, but otherwise please do email us at info@hwbidco.co.uk, or if you want specific help or guidance on specific grants as well that are available, do contact Buckinghamshire Business Grant First. We as a region are offering a £2 million resilience funding grant, which covers some of the grants that aren't available through national government. So if you've got any questions about that, please do contact them. I've got a number for them which we will circulate, and I will just share it now. It's 01494 927 130. So do stay in touch, and thank you so much again for joining us.